Hi and welcome to the Market Alert for Tuesday, the 9th of May 2023. Okay, so we're playing catch up from Friday. We had the jobs number. This was the headline at the end of Friday's trading session. Despite big bounce, banks and crude end week down hard, gold at record highs. It's not so clear. We're on a path to 2%. That's the inflation that they're talking about there. Stocks and yields soared into the weekend amid hot jobs data and regional banks. Apple surging, News Quark US market reports. And then over to yesterday's headlines. US stocks lacked firm direction in post-NFP lull after the Fed slews confirmed tightening of credit availability. Stocks were little unchanged in choppy range-bound trade and following mixed reception to the Fed's senior loan officer survey, apparently. And stocks and a dollar chop while yields climb on unexpectedly ominous Fed survey. So interesting there. Very good headline here, though. Central banks are buying gold off to a record-breaking start in 2023. So the demand for the hard currency by the world's money printing authorities reached 228 tons in quarter one, 176% increase year on year. They've been doing this since 2010, but of course with the advent of all of the CBDCs and whether they're going to be backed by gold, I think there's a pretty good clue here coming. Certainly the uncertainty of inflation, etc., geopolitical events as well. So I'm not surprised to see this happening at all. But like I say, they did start doing this in 2010. I'll find the graph for you for tomorrow and you'll see what I mean. Okay, let's have a look at the jobs report from Friday. We saw we're just finding the numbers. Yeah, we had 253, so it came out hot compared to the 181,000. They downgraded the last month's, what a surprise, which they always do. So we saw average hourly earnings also increased month on month, and also the unemployment rate down to 3.4 as well. Apparently it's a 50-year low. So that was the news on Friday. That sent the markets screaming to the upside. What news do we have today? We don't. So what have we got for the remainder of the week? Let's have a look. We've got the CPI tomorrow from the US. This is forecast once again to be, well, this time it's coming out same as last month. That's what they're forecasting there. So that'll be interesting to see if it does. That's out at 1:30 tomorrow. Quick look through everything else. Bank of England expected to raise rates on Thursday. And what else have we got on Thursday that's going to jump out at me? We've got Friday, we've got GDP for the UK. That's 0. They'll come up with some excuse for that. And then just the pre-lim UM on Friday. So, yeah, the big one for this week is the CPI tomorrow from the US. So we might not expect too much from today, apart from the market settling back in as the European markets and the UK return to business as usual this morning. Right, let's kick off, have a look at the markets. We'll start off with the Dow. So yesterday, the Dow showing a bit of weakness. Like I say, most of the participants weren't in yesterday. Still observation of the and celebrations of the coronation here in the UK. Market stopping at 62% retracement, 20 bar moving average, then moving lower sideways overnight, which you can see there. So have a look at the 30-minute chart. This is the Dow until we had the jobs report, and then we just screamed to the upside. The insanity prevails, as I've said so many times before. There we can see that we were up 501 points on the jobs report from Friday there, which is no small move, is it, as you can see there. So overnight, the market managing to trade to Friday's high, which you can see there, and then failing to hold. Dow yesterday cash market trading down to the DP, the 200 MA, finding some buying coming in there, which you can see a huge volume, and then the market currently below the DP, below the close, and the low there in the gun sights, not that far away. It's only just 100 points to the low, and the 200 MA is also sitting at this level as well, should the market move lower. as we saw all of last week when the market opens at 8 on the cash market for the DAX. The market has sold off and then rallied back, so keep that in mind. And also the high of yesterday is also the same high as Friday, and it needed the jobs report to move the market up to this level. So I don't think we'll be seeing the high of Friday, but you never know. You never know, because the market's going to be hanging around looking for those CPI numbers tomorrow. In the German DAX, electronic yesterday just sideways to lower, finding support at the 78% retracement that we've had drawn in from there. Just came back and it sat on it. It's now going back through. As I've said before, we're likely to be going to the all-time high in the German DAX. It's so, it's within touching distance, isn't it? You can see it there, 16,298. You can see also in the monthly chart this month so far we've been moving to the upside, and that's reflected here as well. It looks a lot more choppier in the daily chart. In the weekly chart you can see the last 2 weeks also sideways to higher. Maybe it will need the CPI numbers tomorrow to do that, but you can see with, like I say, the monthly chart is crystal clear, isn't it, that it wants to move back to the upside there, to the all-time high. When it gets there, who knows? 30-minute chart was sideways to higher, moved up quite nicely. Then the jobs report sending the DAX all the way back to 16,000. And yesterday also retesting this high before the market moved lower. So similar to the Dow, again, the high very important here to take note of even today because the market's struggling at the high. We saw support coming in at the 20-bar moving average, the BRN. You can see the cluster of volume there. Obviously some news there. Market back to the averages and the close of Friday before moving up. Sorry, this is overnight, the close of yesterday's electronic session. Above the DP, unlike the Dow, so showing a bit of strength there. The high is also within spitting distance as well. So given that it's so close, we may see the opposite of what we saw last week, where the cash market sells off and then comes back. More of moving to the upside just to nail the high and then getting the pullback, as it's so tentatively close there. In the 5-minute chart, you can see the overnight market there just moving to the upside above the DP. Yesterday, obviously, that was some sort of news that came out there, and then the market recovering. There you'll see the sell-off with the Dow in the afternoon, but on the electronic session in the morning, the market just sideways and moving higher. And then on Friday, if we just scoot back to that, you'll see the jobs reports, and then it was just one way up a couple of 100 points for the German DAX there. So overnight, the market's still trying to get towards the high, as can be seen there. Let's just shrink this down just to show you how close it is. There it is, just going past it. So it's just at the next BRN, which is the 16,000 level. So the market keen to get back above 16,000 there for the DAX. Moving on to the S&P, very quiet yesterday, sideways to higher, waiting for the CPI numbers. Friday's job numbers, you can see what it did to the S&P, no surprise there. Yesterday just stuck in a bit of a sideways range, and overnight above the DP and the close, with the high in the crosshairs there for this market. Meanwhile, the FTSE yesterday, despite being closed in the daily chart, so you can see moving higher. Friday we had more demand coming into the market to move prices to the upside. Let me just check this. I don't think this is right. That's Friday, and it's missed a day, yeah, because it was closed. So that's why that looks a bit odd. This is actually Friday. I thought that was odd because obviously the Coronation Stock Exchange closed. And I don't know why the electronic must have been closed as well, because there's no data in this particular platform of MT4, which is why it looks slightly odd. And in the 30-minute charts, this is Thursday's market. This is Friday's moving up with those NFP numbers, and now we're starting to trade again. As can be seen there, this is actually the 9th, overnight for the 9th. Moving to the currencies, GBPJPY, the market yesterday trading up to the 62% retracement there. failing to hold. Bit of weakness there. Got to stay above the 5-bar moving average, which ties in with the 38% on the downside, which you can see there. Failure to do this will then see a test of the others all the way down to 78%, which will find support with the 20-bar moving average as well. 30-minute GBP yesterday moving up to the R1 and then selling off there as the market came back 89% and then down, up back 100% before moving up at the close, stopping at the BRN. Then overnight DP became a resistance, and now the market finding support at the low. Without these lines on the chart, you'd wonder why the market stopped in these areas. And just for a bit of sport here, let me just remove this and show you what I mean. Why did the market stop at these areas? It becomes really, really important to have these areas so that you can see where the market is likely to stop at and then offer a potential great risk-reward trade. Meanwhile, in the pound, this up yesterday, bit of weakness. So again, yesterday the markets closed. In Europe, UK, the dollar was able to move higher. In the 30-minute pound, coming off again the close, you wonder why it stops here if you didn't have this on the chart. We traded through the high to the R1 where it stopped. The high tried to offer some sort of support, but it failed, and then the market moving down to the close, bouncing off the close, stuck at the 20-bar moving average down to the DP where it failed. And then we move down through the low, but guess what? We go through the low, we take out the stops, we come back 89%, and then we start to move back up. We've got the 50 MA in the way and the DP on the upside there. Meanwhile, in the US dollar, we're still holding at the 100 level there. Well, it's actually 101 or thereabouts, 100.835, stuck in a sideways range. CPI numbers important for the dollar. That's why it's trading sideways there. And finally, in the metals, over the last few days, you can see it's been volatile in the silver market, up and down after we had the market ramp up to $26.07. The market has gone into a bit of a sideways move. Friday was interesting. It got slammed, as can be seen in the 30-minute chart. Monkey hammered on these job numbers, which is just bizarre, but any opportunity. Traded down to the S2. We soon got it back above the low in the 200 MA, and the market stuck in a sideways range yesterday with it just breaking the 200 MA late on in the or mid-afternoon yesterday. Mid-morning for New York. The interesting thing here is, of course, that the low is also tying in now with the BRN at 25.50, and again we have that 89% retracement that we're just moving away from at the moment. In the gold markets, you can see prices also moving higher, slammed on Friday with those numbers. Again, we'll just have a quick look at those. That's what you call a slam. So absolutely monkey hammered down. No surprise, any chance of doing that. They're going to take the opportunity to do it. And why are they going to do it? Well, we only have to look back to the headline that we saw earlier, don't we? Where we see a central bank gold buying off to record-breaking start. So gold slammed. That allows a lot of the governments to buy more gold at a cheaper price, and when you're buying tons of it, even $1 off is going to make it more cost effective. We traded up towards yesterday's high. The market sideways to lower a bit there at the moment. And then finally the gold silver ratio up on the silver one because it was hammered more on Friday percentage terms, but we're still around that 79.20 level, just below the 80. So it's still in a downtrend for the gold-silver ratio, which indicates that silver is actually giving a better return at the moment than the gold investment. Okay, that's it for this one. Played catch-up in this one, so we'll get back to normal today. Everybody back to the party, and also obviously waiting and anticipating tomorrow's US CPI numbers. Okay, that's it for me in this one. As ever, thanks for watching. See you in the next one.